Hi, everyone. Thank you for joining us today. I have the pleasure of receiving Maad from AtonRâ, one of our long-standing partners in Switzerland. Just a brief introduction for those of you who do not know Privatam yet. Privatam is one of the biggest distributors of tailor-made investment products, and we specialize in bringing tailor-made investment solutions to wealth managers, family offices, and investment advisors around the world. We've been doing so since 2014, thanks to our unique blend of technology and human expertise. And Privatam has always been very keen on partnering up with extraordinary wealth managers, research makers, fund managers in Switzerland and in other places. And in this context, one of the houses that we have been often exchanging ideas with is AtonRâ. Maad Osta, as I mentioned before, is joining us today. So thank you for being here, Maad. Welcome. Tell us a bit more about yourself and your background.
Hello, everyone. My name is Maad Osta. I'm working for AtonRâ Partners. AtonRâ, as a reminder, is an independent asset manager focusing on thematic growth equities, and especially in the areas of technology, healthcare, and renewable energies. It used, and it's traditionally an equity research firm founded in 2004. And since 2014, AtonRâ has started its activity of asset management. And really, the core of the company is integrating non-financial scientists into the in-house investment team.
You're not a typical fund manager. Your research team is made of scientists, of experts, many of them, as you said, that do not come from a financial background. And I guess this gives you a very unique edge compared to other houses.
Yeah, definitely. I mean, that's one of the key differentiating factors. So I'm personally an engineer in energy. I worked as an engineer for a couple of years, and now I'm focusing my work into fundamental research underlying the clean tech, renewable energy sector. We also have people with PhDs in biotechnologies, and the medical industry, and so on. So yeah, that's kind of like the specificity of the company to integrate people with scientific background and mix it with people with more traditional financial background.
The notion of trend investing, be it renewable energies, biotechnology, robotics, it's something that has been very trendy as of late. The truth is that anyone can put together 4 companies within a basket and claim that they are doing trend investment management, but this is not really the case for the reasons that we have already pointed out just now. But one of the reasons we wanted to have this call today with you is that you are focusing on the renewable energies, correct?
Sure.
And given everything that is happening in Europe and in the wider world from a geopolitical point of view, the explosion of prices of electricity and gas, I guess we won't have a better opportunity to talk about this topic than today. So without further ado, I know you have quite a bit of interesting information to share with us. By all means, go ahead.
Yeah, thanks, Archer. So the presentation of today is really going to look into the current energy crisis. What are the impact of the Russia-Ukraine conflict on global energy market with a specific focus on Europe, obviously. So first of all, let's look at the energy transition on this first graph. The first figure you see here on the right is the evolution of the global energy consumption over the years per energy sources. There are a couple of things that you can look and that you can say looking at this figure. First of all, it kept on growing over the past decades. But the only year where we actually saw a decline in recent years was 2020 because of the COVID pandemic and the lockdowns. To be in line with the Paris Agreement and the 1.5 degrees Celsius increase by the end of the century, we would need one COVID per year in a sense. So that gives them a magnitude of the efforts needed. We're still behind of those targets. If you sum up oil plus coal plus gas, you see that they represent still more than 80% of the global energy consumption. Renewables, excluding the large hydropower plants, represent only 6%. And over the past 20 years, we've managed to reduce our reliance on fossil fuels by only 3%. So the key conclusion of all that is that due to the complexity of energy systems, energy transition tend to take a lot of time and cost a lot of money. Now, if we look at what are the impact of wars on energy transitions, well, looking back into history, wars have the tendency to accelerate the energy transition process. That is true in the 19th century during naval wars, where boats moved from wind to coal power boats to gain speed. In World War I, we switched from coal to oil to increase industrial power. World War II was the startup of nuclear technology, first for weapon purposes, but then was used as in power applications. The 1973 Yom Kippur War, where OPEC countries created an embargo on oil exports to the US, was actually coincides with the time where new investments were put into renewables as a way to guarantee energy security. So that's where the NASA started investing into wind powers. The first commercial wind turbine was sold in Denmark and so on. So that was really the startup of all the research into renewable technologies. And we believe that this current war will act as an accelerator for renewables deployment that have already today become cost competitive for many of them. So the energy equation is actually a three-axis equation. There is energy equity, which is cheap, affordable energy to all. Energy security, which is guaranteeing reliable energy supply, and the environmental sustainability, which is the impact of energy on climate. Historically, the world has focused really on energy equity, making sure everyone has access to electricity, to heating at an affordable price. Over the past 10 years or so, the focus has switched to the climate impact of energy, all this leaving behind the question of energy security. Right now, what we are seeing with this current war is that this has put back energy security at the top of government priority list. So the challenge from now on will be to find solutions that have a good balance, a good compromise between all energy security, equity, and environmental sustainability. And we believe that renewables here have a great role to play in this equation. They are, for most of them, already competitive. They enable countries to generate locally their own electricity, and they have obviously a better impact on the environment. Now let's have a look at the interdependency between Europe and Russia. Russia is a big plays a major role in providing fuel to Europe. In 2020, about 27% of all crude oil imports came from Russia, 40% of natural gas, 47% of coal. So that's an important actor. On the other end, also Europe is a big customer to Russia. About 70% of all fossil fuel exports are going to the EU. It's the biggest trade partner and the largest investor in Russia. Now the relationship is not balanced, and here clearly the biggest challenge is on natural gas supply. And why natural gas? While when it is for crude oil or coal, it's much more easier to diversify supply. Those are liquid or solid commodities. When it comes to natural gas, it's a bit more challenging to transport this commodity. It requires infrastructure, either pipeline or if you talk about LNG, liquefied natural gas, you need regasification units. So that requires some significant infrastructure, and it's not easy to diversify overnight. This map is a summary of global natural gas flows. The European market is roughly 450 BCM, billion cubic meter annually market for natural gas. And as you can see, Russia plays a major role. In 2020, it was responsible for almost 170 BCM, which is a significant portion of the imports. Now, the question everyone has is what happened if we were to cut Russian supply? And the answer is, well, Europe doesn't have many other options. One option is, of course, to increase imports from existing non-Russian pipelines, such as in Norway, in Azerbaijan, in North Africa. Another option is also to increase imports of LNG, but that is limited to the available existing infrastructure. So Europe has no way to replace completely all the 170 BCM that come from Russia overnight. It will take a couple of years. Now the question everyone has is how will Europe go through this winter? Well, the European Union has, over the past months, built up its gas storage reserves. Currently, it stands at a little bit more than 85%, which is ahead of the target that was 80% by the end of October. So thanks to that, Europe should be able to go through winter with these capacities. Now, European Commission has released a proposal in September 14 to try to limit the price increase of electricity related to the increase of natural gas prices. And this proposal includes demand reduction. So European Union intends to reduce demand by 10%. With a mandatory reduction of 5% during peak hours. It includes a price cap. So here the goal is to decouple the price of natural gas to the price of electricity by capping the electricity price for all inframarginal technologies. So technology with a low operational cost like solar, wind, and nuclear. And the third point is to introduce a windfall tax. So the windfall tax will tax oil and gas companies basically for excess profit and redistribute it as solidarity contributions, to vulnerable households and domestic energy sources. So that is a plan for this winter. That is a short-term plan, temporary. Now, on the long term, Europe has established another plan called the Repower EU. And the goal of this plan is really to reduce to zero Europe's dependency to Russian gas imports. And to do so, the clear answer is that there is no one fits all solution. It's a series of measures that Europe has to deploy to reach that target by 2030. So we've regrouped those measures into three categories. The first one is energy savings measures, which include improving the efficiencies of buildings, installing heat pumps, or asking people to reduce the heating temperature by 1%, for example. The second category of measures is related to supply diversifications. So as we've said, increase LNG and gas from other places, even on the short term, burn more coal, develop a renewable hydrogen infrastructure, etc. And the third part of measures, which is the one that is the most interesting to us, is really boosting clean energy deployment. And there, for instance, there's a goal of almost tripling the installation of wind technologies in Europe by 2030, multiply by 4 the capacity of solar panels in Europe by 2030, investing a significant amount of money into upgrading, modernizing power grids, and so on. And here, really, in this area, there's significant improvements and investment that are gonna flow in there. So that's the Repower EU is a big plan. We've decided to look at it, and there are 2 criteria. The first one is time. So when will we see the impact of those measures? Is it short, mid, or long term? And the second one is the feasibility of those measures. Is it realistic or not to think that those measures can be deployed? And what we see is that on the short term, of course, Europe will restart some coal power plants to burn more coal. Obviously, it would do what it can also to diversify gas supply, so import more LNG, maximize the amount of gas it can import from other non-Russian regions. But on the mid to long term, really the big fundamental change will be accelerating renewables development, and in the renewable space, the area that is to sustain the biggest growth on the shorter term is solar. Construction cycles for solar energy are short. The technology is competitive, and the European target is achievable. Supply chains are in place to sustain such a growth. So we're expecting a fast growth into solar deployment in Europe in the coming years. European Union has released a specific solar energy strategy. So the goal of the European Union is to have on average 49 gigawatts of solar deployed every year until 2030. And this compared to 25 gigawatts deployed in 2021. So it's almost doubling the current deployment rate, noting that 2021 was already a record year. And that will impact all kind of solar. So utility scale solar, but also residential and commercial solar, like solar that is on rooftops of buildings and so on. And to do so, Europe also intends to create a solar PV industry alliance. So the goal here really is also to develop and to scale up local manufacturing. So not only relying on importing solar technology from China, which would be another problem, moving from a dependency on Russian gas to a dependency on the Chinese-made solar panels. But really here, the goal is to also scale up domestic manufacturing with a target of reaching 20 gigawatts of annual manufacturing capacity by 2025. That would also stimulate innovation into solar panel technology, looking into new materials, also looking into recycling, so that would reduce also dependency on importing raw materials and so on. So that there's going to be the whole solar industry will be stimulated in Europe. Now, looking at this solar industry, this is a wide industry throughout the whole value chain, from raw material extracting companies to companies that manufacture solar cells, solar modules, to utilities that install solar panels for the utility scale or residential installer. There's a large variety of actors. We believe that the best place to capture the growth in the solar industry is on the residential inverter market. The inverter is an electric device that converts direct electricity generated by solar panels into alternative current that is used on the grid and in the buildings. And so there are several types of inverters. There's central inverters for utility scale solar, and then there is residential scale inverters. And we believe that the residential scale inverter is the best place to capture the growth, simply because it has a one-to-one correlation with the amount of solar panels that are sold. On each solar panel, there would be a solar inverter or a solar power optimizer, so electronic device that would be sold along it, and that's really a great way to capture the growth. It's also an industry where there is a higher added value from a technological point of view, higher margins, and fewer players are on this market. And the one company that we've identified and that we've been also following for a long time is SolarEdge. SolarEdge is the leading pure player for residential inverters. It's mostly addressing the US and the European market. They have best-in-class products with the best efficiency on the market today, diversified production over different countries, and it's really well positioned to capture the growth in the US, but also in Europe. Its latest earning reports showed 47% of their solar revenues coming from Europe. So we're already noticing an acceleration in the adoption of solar technology in Europe, and SolarEdge is clearly well positioned in that sense. So to wrap it up, as we said, the energy question is really a trilemma. We need to guarantee energy security, sustainability, and equity. We believe that renewables have a great role to play into answering that challenge. We also believe that there's going to be a lot of innovation put into renewables in Europe, and the solar especially is to benefit from that. And finally, the goal here is to reduce dependency. So European actors have to make sure they avoid transposing a dependency on Russia to a dependency on China, which is today the biggest manufacturer of all clean technologies in the world.
Fantastic, Maad. Thank you very much. That was truly fascinating. I hope, even if it's a very, very summarized showcase of the work that you guys at AtonRâ put together on a daily basis, I hope it's helped to highlight to our audience the kind of due diligence that happens before arriving to an investment case. In this example, SolarEdge. And if you don't mind, Maad, just because I have you here, I would like to ask you a couple of questions, because the topic truly is pertinent to the days we're living at the moment. So what can Europe do to replace Russian natural gas? I know this is what you've covered a bit in your speech, but what's the shortest, most realistic way?
Yeah, well, as I said, Europe has limited substitution options in the short term. What we see is that even in Germany, countries are reopening coal power generation, and I think on the short term, that's what we're going to see. We're going to also obviously see extension of nuclear power plants as much as possible for the ones that are turned on today. No, that's another major issue, and in France especially. And then the second thing is really to boost and to accelerate the deployment of renewables, and to do that, countries could really help into that direction. They can shorten permitting periods. They can making easier to have the approvals for making new renewable projects and so on. So I think on the short term, Europe will just use whatever it has available to guarantee electricity to its people, and then on the mid to long term, it will really accelerate its strategy to shift into more renewables, while also extending the nuclear capacity.
And in that sense, what is the potential for liquefied natural gas?
Yeah, I mean, on LNG, Europe is really limited on the installed, the regasification infrastructure it has in place. So right now it has about 250 BCM of regasification capacity. European Union said this could grow to 300 BCM by 2026. So as you understand, that takes a long time. So that's on the regasification side. Now on the supply side also, there is some limitations. I mean, the LNG market is a tight market and is expected to remain tight. Europe benefited from low demand coming from China in the past few months because of all the lockdowns and the zero COVID policy. Not sure that will remain. So LNG market might remain tight and competitive in the near term, and Europe's capacity to increase LNG imports remains quite limited.
Now, you've already described the short-term fixes and long-term fixes that Europe is putting in place to face the crisis and its dependency on Russian gas. But now, I guess one of the questions you hear most often is, do we realistically have enough, we as people living in Europe, do we have enough gas reserves to make it through the winter?
Yeah, so as I said, reserves are good, above 85%. So if you combine this with the goal of reducing energy demand by 10% in Europe, I think most analysis tend to say that we will have for this winter enough gas to go through it. Now we remain at the mercy of temperatures this winter. So if we get a normal winter, we get through it, and we will still have some gas reserves at the end of winter. If the winter happened to be very cold, then we might use all of the storage capacity we have in place, and the problem will come next summer or the winter 2024. Yeah, that's basically it.
Very good. Let's hope for the best. If anyone watching us today is interested to know a bit more about AtonRâ's investment strategies, the way they work, they want to talk to Maad, there will be a link displayed at the end of the presentation, and you'll be welcome to reach out directly to AtonRâ. As for Privatam, we like partnering with companies like AtonRâ because it gives us a unique edge in terms of selection of underlyings for our investment products. And SolarEdge is a perfect example. So if you're interested in knowing what kind of products could be put together, either with a leverage aspect or a protection feature on companies like SolarEdge, please do reach out to us as well. With this in mind, Maad, thank you very much again for your time. It's been a pleasure. We'll continue monitoring the energy crisis, and I hope that the next time we have this call, it will be to share better news, and we can also talk about other investment cases that you have.
Yes, definitely. Thanks, Archer.
Thank you, Maad.
Thank
Until
you.
next time.